back with Indian Open right here on BloomberQuint. Zerodha has unseated ICICI Securities to become India's largest retail broking firm. The Bengaluru-based brokerage house counted nearly 8.47 lakh active users in December. Competitive pricing has helped this firm take on heavyweights like ICICI Securities and HDFC Securities over the last few years. But is this move sustainable? Is this model sustainable over the long run? Let's talk to the man in charge at Zerodha, Nithin Kamath. He joins us right now on the show. Nithin, good having you. Thanks so much for joining in. Niraj here. Good morning. And congratulations. You obviously are doing a lot of things right. I want to start off with what you believe has been the inflection point for not just Zerodha, but for this online brokerage industry. Is it the data boom? Are there some pull factors, including lower costs, which are the main point? Or is it a combination of a lot of these factors?
Okay, so unlike what most people think we are, I think we are a tech-first brokerage firm. So what we take pride is in our products first, right? So I think the reason for this phenomenal growth over the last 2-3 years is more because of our product, which is, I think, superior to what our competitors have to offer. And of course, the low cost always adds up, So, but you can't really build a business just around low cost, So I think it's product first, and also I think one of the inflection points for India has been this whole boom around Aadhaar, being able to onboard clients online, right? If I were to rewind 3 years back to open an account. We used to have to send like a 25-page document with someone to get it signed, etc. And today you can, thanks to Aadhaar, do it completely online. So I think that's been the inflection point for growth of any online financial services business in India. I think over the last 2-3 years.
Then, where does this industry and where does Zerodha move on from where it is right now? Great, you are at the number one position. You've accomplished quite a strong feat. The competitors that you have, the offline competitors at least, who also offer that online piece, have banks backing them, financial institutions backing them. What would you be doing? Would you stay a standalone entity, or in order to grow more, because of the nature of the industry, you might need some help, some affiliations, some partnerships? What do you think?
No, firstly, I think, one of those problems that we are trying to solve as a business is not really to be a number one, that wasn't really ever the target, right? What we're trying to solve as a business is how do we grow the capital market participation in India? I think last year, maybe 5 million Indians invested once a year in the capital market, right? And which is quite shallow. So the real problem we are trying to solve is that, is to say, how do we grow the ecosystem in India? And also, one thing that most people, including our competitors, don't realize is that 65 to 70% of all the investors at Zerodha are first-time investors. So we are probably the only brokerage company out there which is actually adding new investors to the market today, significantly. And 65 to over 75% actually is less than 37 years of age. So this is a different kind of audience. This is not even an audience which traditional brokerage firms are catering to. But what you said is right. I think the missing piece in what we have to offer is the banking piece. We've recently had a 3-in-1 relationship with IDFC Bank. So the plan is to kind of offer like a 3-in-1 product where the bank is powered by them and the broking and the trading account is powered by us.
Interesting. Yeah, I take on board the point that you are not in this business of being the number one. But at some point of time, because of economics or otherwise, the numbers would matter, and which is why my question to you on that front. But okay, so also let's get a sense from you on the nature of the business as well. You, in the past, have primarily been looked as a platform in which the futures and options trading turnover is extremely high. I know from other participants that you do offer mutual fund investing. I believe it used to be at a charge. It's probably free now. There is broking that happens as well. Has the mix of revenue or the mix of volumes on your platform changed over the years? And how do you anticipate it to look like 2 or 3 years down the line?
Right. From investors, we don't really earn anything. So equity delivery trades are absolutely free. We don't charge a brokerage for that. We don't even charge for the direct mutual funds that we offer, and with direct mutual funds, there's no even earning from the AMC. So that again happens absolutely free of cost. So today, people who are helping us subsidize these costs for the investors are actually the active trading community. So we also are very lucky to be at a spot where we probably have the largest active trading community in India using us. We do between 2 to 2.5 million trades a day. Probably puts us amongst the largest retail brokerage in the world. Actually, if you were to look at just an absolute number of retail trading turnover, right? So today, predominantly the business is skewed in terms of revenue towards the futures and options traders and the intraday equity traders, from whom we charge 20 rupees a trade. But we are trying to kind of bring down the reliance so much on this community. So we've just gotten an NBFC license, so we are about to start a loan against securities business. We have also through I don't know how many know this, but we run an incubator called Rain Matter, where what we've done is we opened up APIs to every aspect of building like a trading platform. And we've invited startups to come build on top of us and build niche platforms that can potentially get new first-time investors to the market. Right? And these platforms are at premium. So there is a cost of using the platform. So there's revenue generated out of this as well. So right now, as I said, the revenues are skewed towards futures and options and active traders. But we also have a really big investing community with us today. For example, the direct mutual fund platform, which we call Coin, we've had over 3,000 crores of investment in the last year and a half or so. So probably qualifies as maybe one of the largest online mutual fund platforms in the country.
Okay, so do you think that's the way the broking business at large could be going as well, Nithin, wherein broking by itself need not necessarily be the primary revenue driver, even though it gets the users that you want on a platform? Right. I mean, not just Zerodha, any business, and then you spring out these allied businesses which are complementary in nature, and that kind of fills in the revenue stream that would be missing because some portions of your businesses are, as you said, being given out for free.
Absolutely. I mean, I think disintermediation is happening everywhere, right? So, see, the thing about equity investing and mutual fund investing is we as broking business don't take any risk in this business, right? Clients bring in 100 rupees and buy 100 rupees of stocks, right? And they bring the money in before buying, so there is no risk we take. So, so even if you were to not make any money of those trades, it's kind of okay for us, right? So, but what you said is absolutely right. I think the world is heading there, So, I don't think brokerage firms anywhere in the world will have any kind of pricing power on broking itself. So I think the business model has to kind of skew towards saying, how else can I make money, and let us get the clients in first and figure different ways to make money out of them in the long run.
So one is the changing nature of the business, and you've kind of given me an insight into that, an NBFC license, some other platforms being built. The pure bread and butter business, now that the size has grown so considerably, what do you anticipate the growth rates to look like over the next few years? Is it possible to predict that?
No, very, very tough. See, the thing is, today what's happening is most investors that we are adding are not really futures and options, traders, so it's investor community. So right now the relationships are starting without really earning any money out of any of our clients. But as I said, the plan is over the long run, to kind of figure ways to add more business out of them. Not just NBFC, maybe a better insurance product, maybe a better, wealth product, So, the idea is to do everything eventually and find different ways to make money of your captive audience, So I can't really, we've been growing significantly because I think we were growing on a lower base. Now that we're at this, base in terms of revenue and profitability, etc. I think to grow 100% year on year from now would be quite tough, So what I'm looking at, I think will be possible is to do between 30 to 50% from here in terms of revenue and profitability. But in terms of client base, because we are going after first-time investors, India has, I think, at least 20 to 30 million Indians who potentially can invest but haven't invested yet. So in terms of new clients, we could potentially grow more than 100% year on year, but revenue and profitability wise may not, So.
Okay. Nithin, we wish you all the best for that. Keep up the good work. Thanks so much for joining me today and giving us that perspective.
Thanks a lot. Yes. Bye.
That's Zerodha for you, the largest online broker. the largest broker per se.
All right, let's shift focus then and talk about what's happening to debt-ridden Jet Airways.